Hey guys, my name is Alan Chen. I'm a CPA and the founder of Free Cash Flow Agency, the #1 dedicated accounting agency to e-commerce and online business owners. Welcome to a video on the 5 most important tax tips for a SaaS company. As a SaaS company, you're likely to have unique tax considerations and requirements. In this video, we'll discuss the key tax tips that every SaaS company should be aware of to ensure compliance and to maximize your savings. At the end of the day, you want to make sure you stay ahead of the game when it comes to tax savings and compliance issues with your SaaS startup, as you don't want to fall behind and have these tax bills and compliance issues block you from future expansion and growth. We have seen it countless times from founders that have come to us with huge historical messes in bookkeeping and tax situation. And it's always a struggle to get them out of that situation. And sometimes by the time the cleanup has completed, they will have missed a big opportunity. Don't be like them and allow compliance and tax issues to throw a wrench in your plans. So here we go. Tip number 1, understand your tax classification. The first step in navigating the world of taxes for a SaaS company is to understand your tax classification. Are you a sole proprietorship, a partnership, corporation, or an LLC? This will determine how your income and expenses are taxed, and it's important to get this right from the start. For example, a sole proprietorship is taxed as part of the owner's personal income, while a corporation is taxed as a separate entity. Huge difference. Understanding your tax calculation will also impact the type of deductions and credits you're eligible for. So it's important to consult with a tax professional to determine the best structure for your business. When choosing a tax classification for your SaaS company, it's important to consider a number of factors, including the level of liability protection you want, the tax rates, the treatment of income and expenses, and the potential for raising capital through the sale of equity. Understanding your tax classification is crucial for a SaaS company, as it also determines how your income expenses are going to be deducted in tax. So make sure you understand these 4 important classifications. 1, as we have alluded to, is a sole proprietorship. It is the simplest class classification and is typically chosen by small businesses or individuals who are the only owner of the business. In this case, the business's income expenses are reported on the owner's personal tax return, and the business is taxed as part of the owner's personal income. A partnership is similar to a sole proprietorship, but involves multiple owners who shares in the profit and losses of the business. In this case, each partner reports their share of the business income and expenses on their personal tax return, and the business is not taxed separately. A corporation is a separate legal entity from its owners, and it is taxed as a separate entity. This means that the business's income and expenses are reported on a corporate tax return, and the business is taxed at the corporate tax rate level. The main benefit of a corporation is the liability protection it provides to its owners, as the owners are not personally liable for the debts and obligations of the businesses. An LLC is a hybrid tax classification that combines the simplicity of a sole proprietorship or partnership with the liability protection of a corporation. An LLC can be taxed as a sole proprietorship, partnership, or corporation depending on the number of owners and the specific tax rule that applies. It's crucial to choose the right tax classification for your SaaS company, as it will impact the tax rates and treatment of income and expenses, as well as potential for future raises of capital when you decide to sell your company due an M&A process. It's also important to keep in mind that your tax classification may change over time as your business grows and evolves. That's normal. Consult with a tax professional to determine the best tax classification for your business. Don't be afraid of going with one tax classification that is best for your situation right now. For example, that could be an LLC or sole proprietorship you just started out, and later changing to a more complex corporation because you have more complex tax situations. Make sure to always take advantage of the entity's benefits at the time of your business needs so that you can always prepare yourself for future growth. Tax tip number 2, take advantage of the R&D Tax Credit. Many SaaS companies are eligible for the R&D Tax Credit, which allows them to claim a credit for expenses related to research and development activities. This can be a significant saving for your company, so it's important to understand the eligibility requirements and keep track of your qualifying expenses. In order to claim the R&D Tax Credit, your company must be engaged in activities that involve the development or improvement of a product, process, technique, or software. These activities must also meet certain criteria, such as being technical technological in nature and must be undertaken for the purpose of discovering information that is technological in nature. The R&D tax credit can be applied to a wide range of expenses, including wages that you pay to your employees who are engaged in qualifying activities, supplies used in the conduct of research and development, and the cost of contract research performed by third parties. For example, if a SaaS company has 10 employees who are engaged in R&D activities, and each employee earns an average salary of $50,000 per year, the company could potentially be eligible to claim and credit $500,000 in wages. Think about how much of a tax deduction and how much of a benefit that'll be for your company. To claim the credit, a company must have documentation showing that the expenses were incurred in the courses of conducting qualified R&D activities. This may include records of the time spent by employees on R&D activities, receipts for supplies, and contracts with third-party researchers. The R&D tax credit can provide significant savings for SaaS companies, so it's important to understand the eligibility requirements and keep track of qualifying expenses. Consult with a tax professional to determine if your company is eligible for R&D tax credit and to learn how to maximize the benefit of this credit so you can keep more of the profit for your company, especially your SaaS startup. The R&D tax credit can be applied, like we said, to a wide range of activities. So really look through your balance sheet, look through your income statement, and find out what things your company is conducting as far as research, as far as technological things you guys are doing that can qualify for this amazing credit that the government is giving out. For a lot of SaaS starters and companies, it is totally worth it, and it's totally worth to look into as it can provide not just benefit for you this year, but for many, many years into the future. It is not always straightforward, and in general, like we said, the activities need to involve the development of a new or improved process, techniques, or software, or the application of existing knowledge to the resolution of a technology uncertainty. Make sure you really scour through your books and make sure you ask your CTO what things are they developing that could qualify for this credit. Tax tip number 3, keep track of your expenses. Properly tracking and documenting your expenses is crucial and critical for survival of a SaaS company. This will not only help you claim deductions and credits on your tax return, but also provide valuable insights into the financial health of your business. Some key points to keep in mind when tracking your expenses include: keep receipts and records of all business expenses, including expenses related to employee compensation, office supplies, marketing, and travel things like lodging and airfare. Keep track of your inventory and the cost of goods sold, as these items can impact your tax liability. Always consult with a tax professional to determine which expenses are deductible and how to properly track them and to document them, as being organized is helpful. Being organized and consistent in tracking your expenses will make it a whole lot easier to identify deduction credit and to properly prepare your bookkeeping and later on translate that to maximizing your tax return. Keeping track of your income, as this will be used to calculate your tax liability. That's the top line. This includes, of course, payments from customers for subscriptions to your SaaS service, as well as any other income that your business generates. Make sure to use accounting softwares or other tools to help you track your expense and income. This will make it a whole lot easier to organize than just scribbling down a piece of paper and forgetting about it, and makes it easier to manage your financial records and to generate reports and analysis that can help you make informed decisions about your business. It will make it a lot easier to identify deduction credits, especially if you have a well-organized chart of accounts set up so you can categorize and really tell apart different time expenses in your company. If you do receive a lot of payments from customers or subscription to SaaS companies, make sure that you're tracking and being able to match up the payment, the cash that's coming in, and the revenue that you're recording on your profit and loss statement. Tax tip number 4, understand the tax implications of software licenses. As a SaaS company, you likely purchase or license software to run your business. It is important to understand the tax implication of these purchases and how they can be deducted on your tax return. For example, some software licenses may be considered capital expenses, which means they must be capitalized and depreciated over time. Other software licenses may be considered ordinary and necessary business expenses, which means they can be deducted in the year they are incurred. So it's important to really understand the difference. If not, I will also ask a tax professional to help you distinguish those two so you can determine how your software license should be treated for tax purposes. The tax treatment of software licenses can be complex and often depends on the specific facts and circumstances of your business. In general, software licenses that are considered incidental to your business, such as office productivity software or antivirus software, those are the ones that are ordinary and necessary business expenses and can be deducted right away. However, software licenses that are considered integral to your business, such as software that is used to provide your SaaS service, those may be considered capital expensive and must be depreciated over time. All right, Last but not least, tax tip number 5, consider hiring a tax professional. All I've mentioned in this video haven't really pointed that out yet. Some of these decisions that you need to make as far as compliance, they're complex. And it's important to have a professional that really understands your business on your side to help you navigate them. A tax professional can provide valuable advice and guidance on how to structure your business for tax purposes, identify potential deductions and credit, and ensure compliance with all tax laws and regulations. They can also help you prepare to file tax returns, provide assistance with audits and other tax-related issues. Overall, hiring a tax professional can be a smart decision for business owners. They provide valuable advice and guidance, identify potential tax savings, and provide assistance with tax-related issues and help you forecast your cash and revenue situation for the future. If you are a SaaS company looking for expert help with your taxes, consider reaching out to Free Cash Flow Agency. We're happy to provide a free consultation to see if we're the right fit for you. We never want to take on a client that isn't, and we always want to make sure that we can provide that return on investment to help you maximize your savings and help you move forward in your business. That's it for now. Thank you for listening. If this video helped you in any way, please give us a like and follow, and we'll see you on the next one. Alan out.